Hey, everybody. It's your boy, Sean McLaughlin. Today is Wednesday, June 11, 2025. Hope you're doing well. We're doing the jam session a day early today because I have to leave my house at the butt crack of dawn tomorrow before the sun comes up to get to the airport because I need to fly to New York City because me and Spencer here at Stock Market Media, we're going to be going participating in a ringing the closing bell ceremony at the New York Stock Exchange. We have some important friends who are ringing the bell and invited us to be a part of it. So I'll be heading out there tomorrow morning. So I'll be traveling. Won't be able to do the jam session at our normal time, but that's okay. We got plenty to talk about today. We exited a position today. We've exited a few positions since we last spoke, and that's what we do here in the jam session. If this is your first time watching, we this is where we review action amongst the positions in the All-Star Options portfolio, any trades we've exited, any trades that we've maybe made some adjustments to that are all according to our plan as we lay out every time. And we also review updating some stops and some positions that we have, if they're moving our way or whatever the case may be, we want to tighten up our risk. So we review that during this session. And then, of course, we touch upon a quick overview of new trades that we've put on since we last spoke. But before we get into any of that stuff, let's drop the old disclaimer here that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you are learning something from following my process. All right, so let's get into the charts here. So the closing bell just rang. The S&P 500 ended up finishing the day down. It was looking pretty promising. We look like we were going to build on this breakout we've been happening. And I was talking to Straz midday, and he was thinking, hey, maybe this is a good spot maybe to buy some puts on some leading names that just to maybe manage if there's if we're overdue for a pullback, maybe this would be a good time to do that. And I pushed back on that. I just said, listen, I think it's natural that the market's just not going to keep going up in a straight line from here, right? But we are getting right back to close. I mean, we're getting close to the all-time highs in SPY. I mean, we're literally 11 points away, 12 points away. I mean, we could hit that in an hour if the headline hits the tape, right? So we are on the doorstep, and I don't know. For me, I feel like we've come too far to not go all the way at this point, right? Once we break through to new all-time highs, then who knows what happens from there? We can have an epic fake out breakout and then we roll over. Totally possible. Or we can have a see you later gap. And you're going to be chasing it for the next 2 years. Who knows? All scenarios are on the table. But I'm not too troubled about today's action. Yes, I didn't like seeing it give back a lot of gains intraday. I have a bunch of positions on that were looking really good, the first 2 hours of the trading day. And I hate to see them melt into the close like they did. But hey, that's what it is. We've had an incredible run in the stock market. Stocks are due for a pullback or at least a pause, so we shouldn't be surprised. And you look at the grand scheme of things here, from where we were to where we went and from where we came. Today's little red candle there. I mean, I could zoom in on it if it helps you see it better. I mean, that's just nothing, right? It's just noise. It's summer trading, as they say. All right. So let's review. Oh, actually, before I move on, let me just bring up the VIX chart because I was talking with VIX with somebody today, and I noticed something interesting, I think. Let's pull it up here. I noticed that earlier this week, the VIX was making new lows since what are we calling this now? Are we calling this the tariff tantrum? No, I had a new name. I called it the Liberation Day luau. That's my new name for this. This is the Liberation Day luau, right? And so this week, VIX has had prints, the lowest levels since the Liberation Day luau. So something notable to pay attention to. It seems that all of the scaredness, the frightenedness of the market has basically been wrung out since then, and now we're back to square one, which makes sense because we're just a spitting distance away from all-time highs. So no surprise. All right, let me pull up trades we've recently closed. We have a couple things to talk about here. Let's talk about CCJ. Now, I wrote a blog post about this earlier on Friday last week. So I won't rehash that for those of you who didn't see it. If you didn't see it, it's on the blog. You can go there. It's free for anybody. Go to allstarcharts.com, go to the options section, and you'll see the blog post there. But the timing of it happened to be pretty nice. Sometimes it's better to be lucky than good. But this CCJ, this is a trade that we got into way back last October or this past October. It's a campaign that didn't work out, but still had a chance to make us money, right? I got into this trade back on October 16th, feeling incredibly bullish about CCJ, but I was feeling cheap. I didn't want to pay the full price for the January 2026 80 strike calls. I was feeling too cheap. I didn't want to pay full price for it. So I got cute and I sold December 65 calls against it to lower my cost. Okay. Well, CCJ, after a couple of days of looking pretty good, it immediately rolled over on me. And on two separate occasions, I rolled those short calls to bring in some extra credit and lower my cost basis. We rallied higher. I was feeling kind of bad about doing that. But then once we rolled over again, I had 1, 2, 3 more opportunities to roll those short calls at the 65 strike for more and more credit. Eventually, I got to a point where I had a net credit of 77 cents in this campaign. So had all the options expired worthless, which it looked like was going to happen as CCJ was going down, I would have walked away a 77 cent winner on a trade that I was dead wrong on. I was bullish on this trade when I got in on October 15th or October 16th. I was incredibly bullish. I was dead wrong, and I was still in a position to make money. Well, unfortunately, due to all these rolls that I had done, my position had morphed into a short vertical spread, meaning after my last roll on April 16th, I finally rolled into the January 65 calls. And so that meant I was short the January 65 calls and long the 80 calls, which are the calls I wanted to be long all along, right? Well, the market has its own sense of humor, and it is ripped off of the Liberation Luau lows. How about that tongue twister? Liberation Luau lows. There you go. We have ripped off of those levels. And on Friday, I wish I could tell you I had some magic indicator that told me it was time to close this trade. Unfortunately, I've been trading for 26 years, and sometimes I just have gut instincts. And my spidey senses were telling me on Friday last week, I said, I don't like the way this stock is setting up here. It looks incredibly bullish. And even though I was bullish when I put the trade on, I am now I'm holding a bearish position, and this is no good. And I feel like this thing's about to pop, and I need to exit this trade. And so I closed what is a short vertical spread. I closed it for a $3.80 debit. So you net the 380 debit against the 77 cent net credit I had in the campaign, and it works out to be a $3.03 loser. Sucks. Could have been worse. Definitely could have been worse, but it sucks. But I'm glad that I got out on Friday because I mean the way this thing's traded this week, I'd be paying a lot more to cover this spread now. I'd probably be paying $6 or $7 to cover this spread now. I haven't looked, but yeah. So we're out of CCJ. Again, I wrote a whole blog post about it. If you guys want to read more about it, it's on the site. But that one we're out of. So let's close the book on that. All right, next up is actually a twofer. The gold and silver. I did a pairs trade. This is something I don't do a whole lot of. All right, but I had a feeling that back on when we did this trade back on April 1st, I believe it was, my thought was that gold had been so strong up to that point. Now look where gold had come, like basically from November all the way up to April 1st. We had a nice strong rally, but its friend silver during that same time period didn't really do a whole lot. In fact, it hadn't even broken out to highs yet. And so the bet I was making was that silver was going to play catch up to gold. The spread between the two is going to narrow, and I wanted to make a bet that would happen, and I want to make a profit when I do so. So this is a janky way of doing a pairs trade. A classic pairs trade would be you would short one stock and you would purchase an equal dollar amount of the other stock and bet on those things coming together. That's a nice, easy way to do a pairs trade. With options, it's a little trickier. And in fact, I didn't even do an apples to apples trade here because with silver, I simply just bought October 31 calls. Okay. I paid $2.25 for them. And I mean, the timing on this looks terrible, right? I mean, this basically fell out of bed almost immediately after getting into this trade, but that's okay because while this was a bullish trade, The gold trade was a bearish one where I was long a bear put spread. I was along the 310 puts and short the 290 puts. So gold also came down a little bit at the same time silver did, which helped offset the losses I was suffering in silver. So we never took a whole lot of heat in this trade. But one thing that's nice is that as gold and silver rallied, starting in April here, gold has more or less just gone sideways, while silver had just a monster rally, particularly these last couple of weeks. And I was looking at my position and saying, wow, you know what? I can now get out of this trade for a win. Not a huge win, but I can get out of it for a win now. And I felt like now is the time to get out again. My spidey senses were tingling. I felt like this was the time to get out of this trade. This was on Monday, by the way, or no, Tuesday, yesterday. I feel like now is the time to get out of the trade because while silver looks strong, which is good because I'm long silver, we bring back the gold chart again. I was looking at this little sideways consolidation, this bull flag, and I'm looking at this rising 50-period moving average, and I'm having the same feeling I'm having with gold that I had on CCJ. Here's the CCJ, right? I'm having this feeling that this thing's about to pop. It's about to go higher. If anything, I want to be long gold. So I said, Sean, let's not be greedy. Let's close this spread down. I had for every short put that I had, or I'm sorry, for every long put of gold that I had, the October 31s and short the 290s, for every unit of that I had, I owned 5 times or five of the October 31 calls in silver. All right, so I sold 5 silver calls and sold 1 gold put combined. I was able to get what did I get? I got like 20, $26 or something. Ultimately, I made $2.05 on the trade, which doesn't sound like a huge profit, and it's not. But we didn't take a whole lot of heat in this trade because one trade hedged the other, not perfectly. It was not a perfect hedge. And in fact, if I were to do it again, I'd probably do it a little different. But we never took much heat in the trade. I think that the worst case, we might have been down maybe $2, maybe a 250 at most. And that's considering, I mean, look at this move in silver where it really really highlights it. I mean, this move here, whew, this was quite a wipeout right after we got in the trade. And so when you see moves like that, and then you think that you were only down just a couple of bucks in the trade, it's not bad. So I ended up making $2.05 or $2.10 on the whole thing. Um, Made money. That's great. Will I do it again? Will I do it this way? I'm not sure, but it was a fun experiment. And for those of you who traded along with me, congrats on your win. All right. The last trade we exited, we got out of this one today. This was a bearish position we had in Churchill Downs, ticker CHDN. We were along the September 85.75 bear put spread. We paid 275 for it. Turned out we got into it right about the lows because it's done nothing but go higher since. And once it broke above 100 yesterday and closed above 100, that was my signal to exit this trade this morning, which I did. I think I got I got exactly, I got 79 cents for it. So not a total loss, but a loss nonetheless. All right. I just want to I'm going to bring up my open positions here real quick. I just want to highlight something for you guys. I think it was ASTS. I don't know if I highlighted this last week, but just want you guys to be mindful. This thing's working. This is great. It's going our way. We're long the August 40 calls for $1.45. My plan, as I laid out when I put this trade on, is that if we get to 40, if and when we get to 40, I'm going to sell half of my position, which will lock in some gains. Should lock in some gains while giving me a free ride on the rest of the position. So just something to be mindful of. I mean, this thing could be there tomorrow if we have a nice strong day tomorrow. I think that was the only position I wanted to mention. Oh, KBH, there was some chatter this morning amongst some people that are in these trades that were hitting me back channel like, hey, should we be closing this KBH? And because my stop is 550, we're long puts. We're long the September 50 puts. And I said, hey guys, well, my stop is 55.50. And I know, yeah, we're above it at the time that they were chatting with me, but wait till the close. It's the closing price that matters. If you want to get out now, fine. I don't want to get whipsawed by intraday noise. And I'm not saying I'm a genius or I'm the smart guy here, but I'm glad that I stuck to my guns because look at the way it closed. It closed, I mean, at the bottom, it closed on the lows, almost below yesterday's low price. That's a nice little reversal candle there. It's very likely that KB Homes follows through down lower. We'll see. But I'm sticking with this trade. All right. So let's update some stops. Okay, we just have a couple stops to update this week. Nothing too major, but Uber, we're long the October 105 calls. This trade is hasn't quite worked for us yet. It started out great when we got in on May 9th or May 12th. We got in and we had just a good solid week of follow through. I was feeling really good about this trade. I don't like the way it rolled over, but I do like the way it held here at 82 and it's bounced, and we've got this 50 period moving average rising up below it to meet it. So for now, my stop is 82 for Uber. If we see Uber roll over and close below 82, I don't like this trade anymore, at least not right now, and I will exit the position. Next up, Comstock Resources, CRK. We're long a September bull call spread. We're long the September 22 calls. We're short the 30 calls. We are moving our stop up to 22, which corresponds with our long call strike. I love the way this stock is forming this high consolidation here, this flag. We've been talking about flags a lot. Me and Steve and the whole team, we've been talking a lot about these bull flags. I'm liking the way this is holding. This to me is a very bullish pattern. And I would not be surprised to see this thing break out pretty soon to the upside. But that said, risk management is job number one. And if it comes back below 22, that would not bode well for me in this position. So I will look to exit it if we get below 22. So that's it. Just two updated stops this week. And we'll quickly review the new trades we've put on since we last spoke. For those of you, again, who are new here, I publish a detailed trade plan for every one of these trades at allstarcharts.com. We talk about the setup, why we like it, what strategy we're using, how we're going to manage risk, where we may stop out of the position, where we may adjust the position, where we may take profits. All those details are laid out for every trade that we put on, and that can be found at allstarcharts.com. Head to the member section, head to the options section. You'll find it there. If you're not a member, what are you waiting for? Hey, go into the chat right there in the YouTube there. There's a little chat, a little button there. I think the second item down there is to subscribe to All Star Options. Hit that button and subscribe. Become part of the community. All right. So quickly, I'll just touch on it briefly. We got long MRUS. I thought I was buying a bargain here on this pullback after this breakout. It still might be. Maybe I'm a little early, but we'll see. I still like this trade. But MRUS, we are long. Similarly, AG, First Majestic Silver Corp. I mean, boy, the way the metals are moving, you got to be looking at the miners, right? You got to be looking at the miners for outsized gains, and you got to like this pattern. And this is one of those trades that's hard to buy, right? When you look at a chart like this after it's rallied from 6 to 850, you look at that and certainly in percentage terms, you say, man, it's hard to buy here. But the way this thing's been consolidating and hanging high, to me, that just feels really bullish. I put a trade on, a creative trade that kind of takes some of the sting out of buying this thing higher. Again, all the details on the blog. But what you need to know for now is that we are bullish First Majestic Silver Corp. Lastly, MRNA. We got into this trade today. We did a little bit of a longer term trade in MRNA, doing a little dumpster diving, if you like to call it that. These are not trades I do a whole lot, but there's a compelling opportunity here in Moderna. I think people are sleeping on this one. The market's fallen asleep on Moderna. Volatility is basically plumbing the depths of the floor. There just doesn't seem to be a whole lot of interest here. And to me, that smells like opportunity. I think biotechs are waking up. We're going to see, it feels like we're going to see some outperformance in the biotech sector, and a name like Moderna, if it just gets a little bit of momentum, if it gets a little bit of buying, this is one of those story stocks that people will just jump on. I mean, this was a darling. If I pull up the weekly chart, I mean, just to give you an idea where we've come from, my goodness, this stock at one point was 400 and almost $500 right here. And we've come all the way down. We're down 90% from the highs since late, mid 2021. We're down 95%. Now, I'm not betting that Moderna is going to go back to all-time highs, not at all. But I've put a trade on that. Let me pull up the daily chart again. If we could just get back and fill this gap, this big gap that to me will feel like a magnet if this thing starts going higher. If we could fill that gap, holy moly, we've got a trade on that will really, really crush it. Again, all the details at allstarcharts.com, member section, options, blah, blah, blah. All right, guys, so that's all I got for you here. Here's the updated stops for those who want to take a screenshot. There they are. Hey, if you have any questions at all, shoot me an email, info@allstarcharts.com or Sean@allstarcharts.com. Both will get to me. I'll make sure to answer your questions as best I can. If you want to subscribe to All Star Options, there's the link. I do a free options newsletter. I write 6 times a week, most weeks. I think it's pretty good, but I'm biased, right? But I'm sharing anecdotes from trading options and talking about lessons that I've learned and describing strategies and interviews with people and whatever is relevant that I think is relevant to all you people who are into options. It's a free options newsletter. Please sign up. And those links are also in the chat too. If it's easier, just go in the chat and click on the link and do the things you need to do. And lastly, if you like the charts that I share, trendspider.com is allowing you guys, if you want to get involved, you could use my promo code Sean50 and get a 50% discount on a TrendSpider subscription for great charts. All right, guys, that's all I got for you. I'm heading to New York tomorrow morning, crack of dawn. Wish me luck. So I'll see you guys. It's early. It feels weird to wish you a happy weekend or a good weekend on Wednesday, but have a good weekend when you get there. And I'll be back next week, as regularly scheduled on Thursdays. Until then, be well. I'll see you on the other side. Bye-bye.